The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m., 24 minutes to go until the opening bell, and we got markets in positive territory yet again. We get Amazon earnings after the bell today. We get non-farm payrolls tomorrow morning. That's on the heels of the ADP number yesterday. Non-farm payrolls tomorrow morning at 8:30. We're going to digest some action today is in Amazon after the bell, another big event. S&P is up 15 points above 6,100 as we come to you just after 9 a.m. Eastern time. NASDAQ 100, 21,770, basically flat, up by 8 ticks. Dow up by 0.2% or 85 points in the green, 45,089 in the Russell, up by about 0.3 or 6 points in the positive. Bitcoin nearing 100,000 yet again. We've been chopping around at that price level. Monday, Tuesday, Wednesday, now Thursday, 98,290. Crude, $71.68, up by 65 cents. Gold backing off from the all-time highs made yesterday, 29.06. We were up at almost 28.95 earlier today. We're sitting right now down by $14 on the session in gold, trading at 28.78. You jump over to silver. Silver backing off from the highs of yesterday. Highs yesterday, 33.21. We're trading down 45 pennies at 32.53 in silver. Notes and bonds, how about it? So when I was on the air when I was getting ready for the program a few minutes ago, I should say, yeah, even 4.43. I was going to say we're at 4.45 in the last hour. 4.43. Can't deny the bounce that we have going on since January 14th. It's February 6th. We've seen higher price and lower yield, as in the bounce in price, the decrease in yield. 4.43, the yield on the 10-year. Now, with that in mind, we jump over to the dollar, just under 108. All things considered, the dollar basically where we've been since November 18th, right? You trade up to that price level during that week of of November 18th, we hit 108.07, and we're just under that price level. So the dollar, we've gotten a few spikes to 110, but seems like we're comfortable right now chopping around at 108. But you talk about a bar, right? Look at the size of this bar. From a low of almost 107 to a high of almost 110. You get the Bank of England, as they cut by 25 basis points also this morning. We'll talk about that. Bank of England, they cut by 25 basis points, but they had a couple members who wanted 50 basis points. So what's that going to do? Bank of England, Europe, England, they're worried about the economy, so much so that they cut by 25 basis points, and the only disagreement with their central bank, the Bank of England, is that some members say, hey, why are we only going 25? The economy's in trouble. We don't need to worry about inflation. We're going to go 50. What if they do need to worry about inflation, though? It's a real tight balancing act, right? When they need to cut to stimulate the economy, and they have weakness. And inflation could present itself yet again, which would make it very difficult to stem that weakness. But no matter what, where we are right now, Bank of England, they're trying to decide whether we go 25 or 50. Meanwhile, the Fed is saying we are on pause. That's going to keep our yields preferential to the rest of the world. And if our yields are preferential, which they're going to be, because our economy right now, if things stay where they are right now, and there's a lot of volatility, there's policy variables, volatility that could come down. But right now, and the Bank of England is just a great demonstration of that, their only question is whether they're cutting 25 or 50, so you better believe dollars are going to be in demand. I don't see this dollar collapsing, not just yet. We had a great conversation with our man Teddy Kegstad on yesterday's program. You can find the archive to that right on our YouTube page at TFNN. Just search TFNN under YouTube. You'll find all the interviews separated that we do. And Teddy was talking about, Maybe we get one cut, two cuts. Maybe you finally get a little bit of movement if we get two cuts in this market, but not in the near term. And I tend to agree with that analysis. You're not going to budge right now. We get further in the year, and the market is pricing in about two cuts by the December meeting. So going forward in 2025, you get two cuts. Yeah, we get the possibility that maybe then, right, we bring things down. We're competitive with the rest. Right now, we are ultra competitive with the rest of the world. They're cutting 25 or 50 in England, and we're not doing that. And so that's keeping the dollar strong right now. Even with dollar strength, gold remarkably strong, which says a lot for that gold contract. There's your euro US dollar action this morning from 1044 to 1036 today. You talk about some movement, man, some volatility. And yeah, we'll see if we make it back down to parity. We've been chopping around between about 102 and 105 since we made that move December 17th. Let's see where we go from there. I was looking at gold this morning. I was looking at the dollar a lot. This relationship is remarkable. And just going to eliminate open interest there. And yeah, we've had a little bit of a decline, right? Originally, you like to see that volume ramping up. This move started on December 18th. So check this out. We're going to look at gold, and then we're going to show you what the dollar did over that time. The dollar hasn't pulled back since December 18th. We've had multiple moves. And meanwhile, we've had gold trade from 2,600 to 2,900 from December 18th, okay? And this is just a notation, but keep your eye on that trend, okay? Since you got that move to 2,750 on January 21st, we've actually seen declining volume as you've crept higher. Doesn't mean that's going to be the case, but you want to see it in, the way that we ramped up from December 18th. Now, why could that be? And this is what's so cool, man. So you go over to the gold chart, you go over to the dollar chart. We were just looking at gold. There's your December 18th bar. Okay. So what happened is that when gold was originally making its first ascent, now remember, we just looked at gold. Okay. And watch this scenario, folks. This is a cool one. There's December 18th in gold. Okay, that's when the run began. Gold trades to 2,600. You pull back harshly when gold trades to 2,600. And remember, okay, that's the day that the dollar exploded higher. So it makes sense, right? December 18th, put it on our chart. Dollar explodes higher from 107 all the way up to 108.26. And that's the day you get a quick pullback in gold. Okay, so now, and keep in mind, though, that the dollar is basically right where we ended that day, December 18th. Dollar sitting at 108. We were at 108 at the end of that day. Okay, we closed at 108.20. We're at 108 right now, December 18th. Gold contract, there's your first pullback. Okay, the market says, oh my goodness, look at this dollar strength. The gold priced in dollars is going to pull back from 26.67 to 25.98. Okay. And then you had this ramp up in volume, right? You see it. The acceleration until we get to January 21st. And there's the gap on the 21st. Okay? And the point is, we got volume in the gold contract the whole time the dollar was actually strengthening. Right, you actually strengthened to 110. Gold was trading higher the whole time with volume. It has trailed off a bit as we've had some dollar weakness. We'll finish up this conversation. Point is, gold is strong, man. All-time highs, market in positive territory. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the NASDAQ 100 barely in the positive. All the markets in the green right now. So to finish up that conversation, because I'm going back and forth. Jumping back to the gold contract. Focusing on the run that we've had since about December 18th, when we've had a straight shot from 2,600 to 2,900 over that time. You back it up to the dollar, DXY. And over that same period of time, there's December 18th. Yes, we did trade to 110. We've pulled back. You're right where you were. Remarkable gold strength. The point being, gold would be much higher if it was not trading in the face of continued dollar strength. I don't see the strength of the dollar abating anytime soon, okay, for the reasons I just laid out with the Bank of England, which we'll talk about as well, right? I don't see the dollar abating. As in, it's not going to rip back to 104 or 103. Okay, that's not going to happen when you have our Fed saying, hey, hold on, inflation isn't going back down. And the job market is actually pretty tight. Now, we get non-farm payroll numbers tomorrow at 8:30. Okay, we got initial claims today. That number coming in at 219,000. Continuing claims come in at 1.89 million for the week before. Two very healthy numbers. Those numbers pretty much where they are in a healthy economy. You always have a healthy churn on a weekly basis, right? Just how it works in an economy. Even in a healthy economy, you're getting layoffs, but guess what? Those people are getting rehired, right? That's the key. Continuing, though, a pretty healthy number as well. 1.89 million on a continuing basis, and remember, continuing claims 1 week delayed versus initial claims. But we get non-farm payrolls tomorrow. Also keep in mind, that number tomorrow, you're dealing with some data that's, 5 weeks old? And January non-farm payrolls can be some of the most distorted for how the season comes off, okay? You're going to have holiday layoffs, right? You come in through the holiday season, you come in January, they don't need those employers. We see the type of jobs that get added, Walmart, Amazon. There's a lot in there that goes into there, okay? But yeah, as long as the Fed is recognizing, which they did, okay, I encourage you to go check out the differences from their statement of last Friday versus the previous one. It was a pretty bold removal in terms of the prior statement. So you're going back 7 weeks ago, 7 weeks ago. The Fed said that they're making progress towards their goal of 2%, and the market was not as tight in the jobs market. And they made two shifts. Not only did they say inflation's not moving back to 2%, I'm surmising, okay, but they took that part out, and they said not only that, the job market is tight, and it is tight. It's 4.1%. So they're not going down right now. And if they're not going down right now, the dollar's at 108. But eventually, okay, I think they will be able to decrease from where we are. Even if we're higher for longer, they're not going to stay this high. That's the one caveat, okay? Higher for longer, but not potentially staying this high. Because this high is very high. And so when that happens, that's going to be another wind at the back of gold's back. And so that, I think this might be the start of the next run on gold, as in that start December 18th. Could be in the next start. We're talking about 2,600 was the start. You're up to about 2,900 right now. And if you're ever looking to an A to B, C to D, and it might be out there, folks. Okay, you're talking about a move that brings you up to almost 3,400. 3,366. And that's real, man. We just traded to 3,900. Gold, you're only talking about $460 above where you're at. Okay. I think that's the next move, man. 3,350, 3,400 in the gold contract right now. And, that might take the next 6 to 9 months to play out. Okay. But don't think this gold run has passed you by. Because look where the dollar is and realize you're trading gold in dollars. And and we're only talking about, what is that? 460 points above where we're at right now. That's less than 16% run for gold. And some of these gold equities, check out the XAU and the HUI, right? You talk about an explosion, man. From 135 to 165 almost yesterday. 163.88. HUI, same deal. 270 to 330. Not quite back in the channel, but man, you should see it. Some of these gold equities. If you haven't checked out the gold report, folks, please come check it out at TFNN. They are exploding back into their channels, man. Remarkably. All right, let's talk some other equities out here. Let's talk some Ford. So, Ford, they're not going to be making as much money as they were thinking. And you talk about a move, man. We closed yesterday about $10. We're down about 6% right now to $9.43. And the guidance, not what you want to hear, man. It's going to cost them more to make cars, and they're not sure how much they're going to be selling them for. And I'm being kind with that, as in they don't think they're going to have. They're going to have to decrease price to keep up. It is a tough competitive market, aside from tariffs even, but that is looming large on all these car companies. Okay. We jump around to other companies. Let's go to Qualcomm. So this week, you have 25% in the market capitalization of the S&P reporting their numbers. It's a big week. Jump over to Qualcomm. And as you can see, Qualcomm down about $10 in the pre-market from 175 to 165. But so they beat. I was looking at this earlier. You talk about expectations, man. because these are pretty decent numbers on Qualcomm. I mean, they see it. Top estimates for earnings and revenue on strong smartphone demand, and they even guided. So the Internet of Things business grew 36% to $1.55 billion. Low-power chips, industrial purposes, as well as chips it sells to Meta to power its Quest headsets and Ray-Ban branded Meta smart glasses. You know, I talk about we go to Target with Tommy all the time, and I've seen those Meta glasses. I'm not going to be buying them just yet, but they look like regular sunglasses, man. Nobody's going to know that you're walking around wearing AI sunglasses pretty soon, folks. That is coming, man. If you haven't seen them in Target, check them out. They got a display, and nobody's going to know that you're wearing those glasses. Maybe for those paying close attention, but not really. They just look like some black Ray-Bans. Meta shares today up by about $3. As I mentioned, Amazon with their numbers after the bell, you're going to get a lift by about $2 right now. Apple shares down $1 to $2.31. We check in on Google, down about $2 as well. Stay tuned, folks. We're coming back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P right now up by about 13 points or 0.2%. We jump over to NVIDIA shares. Yeah, quite a run, right? See why they like buying the dips in these equities, man. From 111 to 126, just like that. We put this thing on a daily. And yeah, you still got this deep sea gap looming out there, right? All you have done is trade back to the beginning of the trading session from January 27th. Now, what have we had? We've had Google coming out, talking about massive CapEx, okay? You're going to get it from Amazon tonight. I don't see it slowing down on NVIDIA, but this is where the conversation comes in terms of price for optimism. Right now, you just traded back to where we were in May of last year, and you weren't that far from giving back an entire year on NVIDIA that was priced into growth. That didn't happen. That's what happens when you trade flat, right? Think about it. You take out an entire year, and sometimes things get a little bit euphoric, but nonetheless, you see the acceleration we're getting on this week, man, from 111, and as I mentioned, right? Keep in mind, folks, from that high of 153, talked about it earlier, to that low of 111, over $1 trillion in market cap. I don't think I've seen that article written. Anyone seen that article? You got a headline? Where are they? That's clickbait, man. $1 trillion in market cap lost on NVIDIA from 153 down to 111. Remarkable. It just points to the volatility coming down the line. And it's not going to end, okay? It's not going to end right now. That's for sure. See where I have. Is this the one? No, that's not the one. Here it is. This is the one. Lawmakers push to ban DeepSeek app from U.S. government devices. You better believe it, man. You know? Listen, I'm hopeful for the best from this current administration. The TikTok deal makes no sense, okay? Trump's got some big backer that's totally into TikTok now. He wants the government to buy it. He's not so concerned. He's got bigger things to worry about TikTok. You better believe you better be worried, man. This is not like Zuckerberg controlling your data, okay? This is state-sponsored app that all the kids are downloading. Of course it's a danger, so of course U.S. government devices shouldn't have it. Quite a different story when you got state-controlled companies that are pushing their products that they don't even push across their own country, right? That's not capitalism, folks, okay? I'd be very skeptical, and, you know, regardless of the AI conversation, longer term, I think that, yes, engineering is going to matter, okay, but computational power that we've seen what it can do now, that's always going to matter as well. But yeah, get that app off of government devices, please, okay? Now, this one's interesting, man. So, more than 40,000 federal workers have resigned so far, short of the target. They think there's going to be a rush by the Thursday deadline. Bloomberg Law had a great conversation about this I was listening to the other night driving home. And they talked about how this was akin to what many people received on a buyout offer for Twitter, okay? And what ended up happening is that this is a delayed resignation, deferred resignation, something like that is how they label this. Let's see if they have the line in here in terms of what they actually call it. Yeah, because it's not a buyout. This is where things are, and there's no legalese in this. And and we'll see how this plays out. Widespread uncertainty about whether it's going to work as advertised, okay? Yeah, I don't think they have it in here. What happened at Twitter, okay, is that many people took this similar buyout in a similar fashion. All it says is like reply to this email with the word resign, and you're in. This is not how contracts work. So what ended up happening was it became a huge legal dispute. It's still going on. Many of the people that accepted that buyout, because this is great, you know, if they want to offer the buyout, offer the real buyout. A real buyout usually comes with a contract, right? That you have your lawyer take a look at. This is not a contract. When they send you an email and say, hit the reply button and give me one word and we're locked in. What ends up happening is a lot of people took that and then they got laid off prior to that deferred resignation date, okay? So this is a deferred resignation date that goes out to when? Like August or something like that, right? What's the offer? I should know it better as I'm talking about it, okay? But it was a great conversation on it, and not a lot of articles have covered this, but they don't have a lot of protection. And so it's going to be interesting to see how this plays out, that if they go through with that, are they actually protected up until that day? Because when it happened with Twitter, people accepted it, and then guess what? They got laid off anyway over that time. Nonetheless, we'll see how that plays out as many policy decisions loom, to put it lightly, right? All right, we jump around to some other equities. As I mentioned, earnings, 25% of the market cap. Eli Lilly, they're out with their numbers. They got an earnings beat and revenue miss, though. But nonetheless, Zepbound and Mounjaro, yeah, they're soaring. Let's see, where did I have it? There it is. They're going to make $22 to $23.50 a share in 2025 profits, pretty much in line. Earnings topping estimates. Sales just missed at 13.53 versus 13.57. But still, how about fourth quarter revenue up 45% from a year earlier? And then Zepbound and Mounjaro. Mounjaro, $3.5 billion in revenue, up 60%. Yeah. Analysts were looking for 3.62, a slight miss though. But guess what? I think they're close enough, I guess, on the growth. Zepbound, first full year, $1.91 billion. Again, slightly below. But it seems like the market seems like they're close enough. Their older diabetes drug topped estimates, $1.2 billion, up 50% from a year earlier, and the market was looking for only $900. So check it out, right? I mean, look, they missed slightly on Zepbound and Mounjaro, but they make up for it with older diabetes drugs. Here's the kicker. The growth includes a one-time benefit of $300 million due to an amendment to Lilly's collaboration with a partner. But they already factored that in on the analyst estimates, I imagine. Yeah, so strong numbers from Eli Lilly, excuse me. All right, NASDAQ just rolled over to negative prices. Yum Brands up 7.8%. Look at them. Strong Taco Bell sales. Let me find that one. There it is. Somebody was posting Taco Bell in the den recently. Who was posting that Taco Bell? You spend a lot of money on that Taco Bell? It must be. Strong Taco Bell sales fuel Yum Brands earnings beat. How about the net sales, man? 16%. KFC's international restaurants and Taco Bell. Net sales climbing 16%. More than half of their quarterly sales were digital, which include online and delivery orders. Man, it is always amazing how fast things can change. I mean, how many years back would you have to go to say, hey, guess what? Half of your sales are going to be placed digitally, not at the drive-thru. Say, oh my goodness, that is a mammoth transformation, and it's taken place over 5 or 10 years. Yeah, COVID accelerated everything. Over half. You better believe that it's digital. All right, NASDAQ 100 positive by 7. NVIDIA shares, they give it back slightly. We get Amazon after the bell today. They're up $1.65. Stay tuned, folks. We're coming right back, talk some more equities.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, You choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P is positive by 10. NASDAQ 100. We're flat right now. A little volatility. Let's jump out to those magnificent 7. Apple shares. A little bit of a lift on the open. We're up by $1 to $2.33. Keeping our eye on Amazon. They're up by almost $2. They have their numbers after the bell today. Google down by 2. They have their numbers on Tuesday after the bell. Tesla shares down another $10. Get your spikes up on your back on Tesla shares, man. I've been saying it. Look at this run. We're now breaking through the 382 of the move. Okay. 316. Maybe I'd start looking at it. That's all the way to the 618 from the move you had on the election. Okay. Talk about it, man. Yeah. And we're now breaking through the lows we had on January 2nd, 10th, 13th. That was a slight area of resistance. You stopped there on February 3rd and February 5th as well. We're through that area. Might get a little consolidation around that 50%, but yeah, maybe you put your spikes up against, your back up against the wall. 310, the lows there, 309.22. Yeah, you're talking about another $60, but guess what? You just traded down $120 from where we were December 18th. Pretty remarkable. It's that day as well. That was a big day in the markets, December 18th. That's the day we went over. Gold, dollar, all that movement. That was the spike high on Tesla, and the market just kind of reverberating on that level. All right, let's jump over to Roblox. So, tough day for Roblox shareholders. Down by $10 plus. A little bit of a lift on the open, still down by double-digit percentage, down almost 14%. There's your move on their numbers. Man, look at this pop from 50 to 65. First move is not always the move that carries, but boy, my goodness, that is quite a pop. You're talking about 30% off the lows right now. The headline, fans gaming industry gloom with weak forecast as shares tank. Well, they're going to have to update this article if this thing keeps climbing. Bookings for 2025, 5.2 to 5.3. The midpoint just below estimates. The forecast adds to worries about the video game industry's health after EA had a weak outlook. Roblox projections points to a third consecutive year of 20% growth in bookings. Yeah, daily active users, fell slightly to 85.3 million in the 3 months ended December 31st from 88.9. Fourth quarter bookings of 1.36 billion, missed the estimate of 1.37. I have a vast understanding. Not vast. I have a somewhat vast understanding of Roblox, okay? Tommy enjoys playing Roblox games. A dramatic portion of their users are under the age of 14. Not sure they're all 4 years old, okay? We've never spent a single penny on Roblox. Now, his brother Landon, he likes Roblox as well. He'll be 8 in April. And maybe sometimes they'll get a Roblox gift card for their birthday, right? Or Christmas. Because, yeah, you can buy gear with it. You can buy, I forget the actual term of what you're buying with it. You know, it's new hats, new toys, new features, new accolades. You know, you boost up your player, stuff like that. We never spend a single dollar in there. And it bombards you with, do you want to buy this? You have to buy more tokens, this, that. We never spend a single dollar. It's pretty frustrating at times. Point being, if they're decreasing numbers, and my general feeling is, yeah, kids like it for a free video game, but I'm not going to spend a penny on there because you're spending pennies on worthless stuff. It's not like buying a game where at least there's value. You're already playing the game. They're just trying to get you to spend more money to wear a special hat. I don't like spending that type of money. So it's a unique platform. They're talking about billions. But yeah, daily active users dropping 5%. Why are they dropping 5%? Okay, anyway, that says it all, and I think that's what the market is worried about on that spike lower initially. Decent numbers, but be careful on this one as well. And you want to see what's capable on this equity? Yeah. You have this unreasonable high out here looming at 141 when you tank down to $20 over the period of just 6 months. Right? Just 6 months. And all now you're back at the 382. You've risen to the 382 of the pullback. Pretty remarkable. You have broken above this area that was about $50. That was resistance to the upside. But yeah, as somebody who has kids that play that game, it seems like nonsensical spending. And I'm not against buying some games. We have a Switch. There's healthy screen time, folks. Nothing wrong with that. But it's buying nonsense. I'm not spending. And anyway, they bombard you. The second you buy a hat, it's asking you 3 seconds later if you want to spend more tokens to buy some mittens, whatever it is, right? Makes no sense in my opinion, but kids enjoy it. That's what I've always said. I say, but kids enjoy it. But guess what? They're dropping numbers. So I'm like, man, here I am saying, what is the point? Who spends money on this garbage? And I love spending money on video games sometimes, okay? It's a great present. But I always was like, I guess I'm an old man that doesn't understand it because the numbers keep going up. And if they have the people that are playing that game, now they've dealt with allegations of fixing their numbers, okay? When was that slide? Is it back here maybe? There's been so many slides, I can't keep track of when those reports came out. And I wouldn't be surprised, folks, from seeing those numbers. So keep your spikes up on your back in that one. I know it's a general statement, but those are things that you want to try and process into the risk-reward portfolio, right? When I was playing tons of poker, and folks, I play millions of hands of poker, okay? And what's great is when you play a large sample size like that is you're only thinking of a longer-term average. That's all you're doing. You're quantifying risks on every side of the trade. And I'm playing millions of hands of poker, and I'm contemplating how decisions like this, factoring in all the probabilities of the decision tree that is out there, will play out. And when I look at certain equities like that, right, on a longer term basis, my brain goes, hey, if you make this trade 100 times, how many times? Even 1,000 times is a better way to think, right? But it gets difficult to calculate the difference between 100 times and 1,000 times. So 100 times, even 10 times is close enough. You can see. But those nuances, they matter dramatically when you run the numbers over and over and over. But a company like Roblox, how many times is that going to be a problem? Ooh, it's going to be a problem. Probably more times than people factor in, even if that's 5 times. When I say a problem, maybe they have been fixing those numbers. Maybe they've been fudging them a little bit. And maybe now that we see that they're declining, they're having trouble assuaging the numbers in a proper manner. It's just risks you want to factor in. Because when I was playing poker, right, it's real easy, folks, and I do it all the time. If I'm playing in a friend's game or something, you got 10-8 suited, right? You get 10-9 suited, Jack-Queen suited. Somebody makes a big raise. You go, I just feel like seeing a flop, man. I just want to see a flop. I'm here to play a little poker with friends. I'm down the casino playing 1-2 no limit. You know, I want to see a flop. when you're running the scenario and you're playing a million hands, folks, you don't get to call big raises with 9-10 suited just to see flops. Because when you play a million hands, you're going to end up losing tons of money because that scenario is a loser in the long term. And you want to try and think about those scenarios on a longer term basis when you're doing something like that in the market. Okay? Trading Roblox, yeah, you got some risks out there when they're dropping their user base by 5%. Look at that chart. Stay tuned, folks. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets in the green. S&P's up by 13 right now. NASDAQ 100 up by 50. Dow up by 10. I got Amazon up here. Amazon up $1.60 today. We just made all-time highs. We're trading at 237, just off those all-time highs. And we have their numbers after the bell. So looking at what type of volatility you have coming down the line, about a $15 move. Now, really, it's interesting, right? The one-day expected move up here. Market maker expected move, MMM, market maker move, okay? And that's basically when it's pricing in an event, folks, off of implied volatility, and it's telling you that that event is pricing in just the event about $15. You want exposure through Friday, and that's why. If you want exposure through today, you're paying $15.12. You want exposure through Friday, you're only paying an extra 60 cents of volatility in either direction. It's all about earnings. If you're trading the options, you're going to be the ones They're expiring tomorrow anyway. So you're looking at about a $15.62 move price in either direction. Okay, so at the money is going to cost you $237, about $8 in either side, right? So you buy a put, you buy a call at the money. You need to make $8 before you make anything. You buy both, and you just want to look for volatility because that's what you're doing. If you buy a put and you buy a call at the money, you're looking for volatility. That's all you're doing, because guess what? Your max loss is if it stays right where it is. If you're buying those both right where you are at the current trading price, you need $16. It's a move, man. A lot of volatility priced in for Amazon. $16 move. We've had Google, as we wrap it up, miss on their numbers a bit earlier this week. And you back up Microsoft with their miss as well. So a little bit of pressure on Amazon as they've charged higher, even in the face of Microsoft and Google. We'll see what they do tonight as well. Folks, thanks so much for kicking your trading day off right here at TFNN with me. Stay tuned. We got Basil Chapman with the Tiger Technicians Hour coming up next. Steve Rhodes after that. Fast Market at 12. Larry Pesavento, Jacob Shoup this afternoon. I appreciate it, folks. And we got jobs number tomorrow. So I'll see you tomorrow at 9 o'clock. We get those job numbers at 8:30. Stay nimble, stay quick. Stay tuned for Basil. Have a great one, folks.